Hello friends, myself Vaishali Bharat Gholab. Today we are going to see basic accounting terminologies. These basic accounting terminologies help you to understand account subject. First and most important basic terminologies come across accounting is cash transactions. Cash transactions are business transactions in which cash is paid immediately is called as cash transactions. For example, purchase of goods for cash, payment of salary and receipt of interest. Then credit transactions. A credit transactions is one in which cash is not paid or received immediately at the time of transactions, but it is paid or received at later date. For example, purchase or sale of goods on credit, salary due but not paid, commission due but not paid. Then barter transactions. When things, article are sold or purchased in exchange of some other things or article, that we call it as a barter transactions. Means simply is exchange of goods, things and article in exchange of goods, things and articles. Goods. In accounting, the goods term as the merchandise, article or things in which trader trades. For example, machinery is goods for the trader who deals in machinery. Stationery is goods for the stationery merchant. Books are goods for bookseller. That is the mean by goods. Another terminology come across in accounting is purchase and sale. The term purchase and sales are used in accounting to indicate purchase and sale of trading goods or finished good. Then purchase return and return outward. This term indicate the goods returned to the supplier out of the goods purchased from them. That we call it as a purchase return or return outward. Then sale return or return inwards. This term is used to show the goods returned by the customers of the business out of goods sold to them. That is sale return or return inwards. Then stock. Okay, stock means unsold goods. Stock means unsold goods, or we can say the goods laying in a business on any given date, that we call it as a stock. There are two types of stocks we come across in accounting, that is opening stock and closing stock. Opening stock means what? The goods on hand at the beginning of the trading year, and closing stock means what? Good laying unsold at the end or at the end of the trading year are termed as closing stock. See, remember, closing stock of the previous year is opening stock of the next year. Then debtors. Debtors, a person who owe us something is our debtors, and he remain a debtor till pay the amount he owe. When businessman or any company sell the goods on credit, unpaid customer account is nothing but the debtors. Okay, the persons who owe us something, that is we call it as a debtors. Similarly, when we purchase anything on credit, that is our creditors. Creditors means a person to whom we owe something is our creditors, and he remain a creditor till the amount owing to him is not paid in full. That is creditors. The debtors and creditors are again we are going to see that sundry debtors, sundry creditors, and bill payable and bill receivable in next videos. Then debt. What is mean by debt? Debt in simply that is a loan or obligations. Okay, when something, usually money, is owned by one party, the borrower or debtors, to a second party, the lender or creditors, that is nothing but the debt. There is another type of debt we come across, that is bad debt. Bad debt means what? The debt which cannot be recovered, that we term as a bad debt. Then asset. What is meant by asset? Assets is nothing but what an entity owns. Here entity means what? Entity refers to a firm engaged in producing goods or services. Assets are of various types. Fixed asset, current assets, contingency assets. Fixed assets means land, building, machinery, equipment. Current assets are cash in hand, cash at banks, debtors, bill receivable, short-term investment, prepaid investment, inventory are all the current assets. Then liability. Liability, when an entity OV is called as liability. Okay. Again, liability are of fixed liability or long-term liability, short-term liability and contingency liability. Fixed liability means those liability which company has to pay more than, which period of repayment is more than 5 years. That we call it as a long-term liability. And short-term liability, those liability which company has to repay within one financial year. Then capital. What is meant by capital? Fund provided by the proprietor. Proprietor is nothing but the owner of the business. When he introduced the money or fund in the business, that we term as a capital. Drawings. Drawings means if the owner or proprietor uses the business cash or business assets for his personal use, we treat as a drawings. Capital expenditure. Capital expenditure, any expenditure incurred for acquiring fixed asset and improvement or expansion of the fixed asset, that we treat as a capital expenditure. Okay, because capital expenditure involve huge amount of money. That assets will give the returns for number of years. That expenditure we call it as a capital expenditure, means purchase of machinery, equipment, assets. Then revenue expenditure. Here revenue expenditure is any expenditure incurred for the maintaining fixed asset and meeting the day-to-day expenses. What are the day-to-day expenses? Any businessman or any company has to pay the salary or other expenses, that is pay rent, electricity bill, okay, that we come purchase of material, that are nothing but the day-to-day expenses, and expenses incurred on that we call it as a revenue expenditure, and this expenditure will give the returns in that accounting period only in the same year. That's why it is called as revenue expenditure. Now deferred revenue expenditure, it is also a revenue expenditure, but its benefit or advantage of such expenditure is not limited for the year in which we have incurred, but it is derived by the business for number of years in future. That type of expenditure we treat as a deferred revenue expenditure. Now, what is meant by discount? Discount is simply an allowance or concession given by the seller of goods to the purchaser on the catalog price or sale price of the goods. Again, discount is of two types, trade discount and cash discount. Trade discount is, it is an allowance given on catalog price of the goods. And remember one thing, trade discount does not appear in the books of account separately. Another discount is cash discount. Cash discount is an allowance given on sale price to encourage the prompt payment of cash, and this is recorded separately in the books of account. Remember, cash discount and trade discount. Then turnover. Turnover means the total sale of the business during a given or accounting period. That is called it as a turnover. Then entry. Entry is recording a transactions in a journal or ledger is called as entry. When the any transactions occur, first of all they are recorded. That recording we call it as a entry. Recording a transactions in a journal or ledger. Journal or ledgers are the books of account. Then voucher. See, to record any transactions, we require some evidence. Voucher is nothing but a document evidence for the business transactions. With the help of that voucher, we make the entry of that transactions in the journal or subsidiary books. The invoice. Invoice means what? Invoice is a business document which is prepared when one sell goods to another. This is nothing but the statement which is prepared by the seller of goods. That is called as invoice or bill. Then receipt. Receipt, it is an acknowledgement for the cash received and it is issued to the party paying cash. Then goodwill. Goodwill, it is the benefit arising from the business connections and reputation and name earned in the market. Goodwill is one type of intangible asset. Thank you.